is not cool. And unfortunately, a new war has erupted overseas recently. I'm not here to talk about the specifics of this war or to discuss the geopolitics involved, but what I am here to discuss as a trader and an investor is the impact that wars have historically had on the US markets. My name's Royce Jacob, and welcome back to Waves Capital. So to kick this video off, I do want to read over the key takeaways from this great Investopedia article. And right off the bat, I want to shout out the authors involved, okay? Deborah D'Souza, Thomas Brock, and Ryan Eichler, because we're pretty much just going to read over some excerpts from this article that I've highlighted as the content of this video. Okay, so I want to read some key takeaways. I want to quickly jump into a quick tangent, just giving you guys my thoughts on the markets right now. And then we'll read over, again, the highlighted paragraphs I have here and take a look at some charts as well. Okay, so key takeaways. Through war and defense spending can amount to a sizable portion of the US GDP. Wars often have little sustained impact on stock markets or economic growth at home. 2. Markets largely have ignored recent conflicts related to the Middle East and Iran. 3. A war between Russia, Ukraine, and NATO allies, however, may have a more severe impact, especially on oil and other commodity prices. Lastly, still, stock markets recovered to pre-invasion levels only a matter of weeks after the invasion of Ukraine by Russia. Okay, so obviously, the new war that I'm speaking of involves Israel. And this article specifically is referencing the Ukraine-Russia war, which is still in play. But the more recent one, of course, is the attack on Israel. But once again, not discussing the specifics of the new war at hand, just the impact the markets have on this, okay? Or the impact that war has on the markets, I'm sorry. All right, so again, we'll read over a few pieces from this article, but I do want to reference just a quick note from the newsletter that I sent out this morning. Eventful weekend. It's always crazy to come into a new trading week when something like this occurs over the weekend prior. But, I mean, thankfully, it was an amazing day in the portfolio. I'll talk about Weight Watchers a little after I read over this, but And I did feature the article we're reading over in the newsletter first. So as always, the newsletter saw it first. But I want to reference this right here, okay? So I want to make this clear. I am not a proponent of war. I don't like war. I hope none of you do. That being said, I want to keep the geopolitical issues as objective as possible. I don't want to talk war. I want to talk about the war's impact on the capital markets. And that's what we're here to do today once again. As you can see above, the U.S. equity markets typically aren't heavily impacted by offshore affairs. So again, just to summarize, if you didn't catch that from the key takeaway, typically the U.S. markets just shrug off wars for the most part. You get that first impact, the first blood. But after that, the markets typically recover. So all in all, I expect this macro dust to settle fairly quickly. And I still believe that the bulls will prevail in the month of October. Been talking about this for months. The month of October, November, especially historically bullish, and I still believe that'll be the case. And we're kind of seeing that in the markets right now. I wish healing upon the afflicted areas and those impacted by the events. So again, it sucks. It's sad. I just wish happiness and peace for everybody. Okay, so that said, Weight Watchers. It was on a day like today, on a day like this, I'll actually just show you guys this top Weight Watchers position because this printed for us today. Okay, this Weight Watchers $10 call, October 20th expiration. So far, this position is up. I think a total of like 200% today alone. Obviously, skyrocketed, almost doubled today, up 13%, outperforming the rest of the market significantly. So shout out to Weight Watchers. And again, on a day like this, I'm especially thankful for some of the gains. So on that note, if you guys do want to know how I'm trading my personal portfolio on a day-to-day basis, literally every call option, put option, stock position, cryptocurrency position in my entire portfolio, which is updated daily, that is going to be the first link in the description of this video or under the like button, okay? My complete portfolio and daily newsletter. Okay, I don't know why I keep zooming in here, but this includes a complete breakdown of my entire personal portfolio. You can just read through that. That is everything that this product entails. Of course, the daily newsletter as well, which we just referenced. You get one of my trade. This is just part of the trade alert below this and below the portfolio breakdown that you kind of just got a peek into is me walking through the trades, what I picked up. Honestly, today picked up some new C3 AI ink and some other call options as well. So if you want the newsletter, if you want a complete breakdown of my portfolio, $15 a month, $40 for every 3 months. As always, I recommend you just try free for 7 days. And if you don't like it, you can always peace out. But I trust you'll be sticking around. And if you do sign up, then welcome to the Waves fam. Welcome to Waves Capital. Look forward to having you. Okay, and if not, as always, no worries. Appreciate you watching this video here. Let's get to reading this. I don't know why this is zooming in so much. Okay, how war affects the modern stock market. A look at investor attitudes to war and uncertainty in the modern era. But how do wars affect the economy and stock markets? Security experts are weighing in and only time will tell. But investing experts are sending out reminders that past wars didn't push U.S. equities lower over the long term. How will markets react this time? Already read the key takeaways, so let's read this. Markets often shrug it off. LPL Financial Research notes that stocks have largely shrugged off past geopolitical conflicts. Quote, as serious as this escalation is, previous experiences have indicated it may be unlikely to have material impact on U.S. economic fundamentals or corporate profits, said former LPL Financial Chief Investment Strategist John Lynch, referring to the January 2020 U.S. airstrike that killed Iranian general. Quote, we would not be sellers of stocks into weakness related to this event, given stocks have weathered heightened geopolitical tensions in the past. Okay, so again, this is a completely different situation. Honestly, this is more tragic. I would say objectively more tragic. That's not an opinion. But again, history doesn't repeat itself. It tends to rhyme. Unless there's not much data going back. I don't think there's any at all of war on home turf, on home soil. So obviously, if that does happen to happen at any point in the future, knock on wood, knock on my metal standing desk. Hopefully that doesn't happen. Obviously, this doesn't relate there, or this doesn't apply if that does happen. But with offshore affairs, typically the U.S. markets shrug it off. And as we'll read below, it can sometimes benefit the U.S. markets for a few reasons. Another example is after Russia invaded Ukraine on February 24, 2020. I'll just stop here, and you guys can kind of pause on these charts if you'd like to. It rattled the global markets. In the U.S., the S&P 500 index fell more than 7% in the days and weeks immediately following the incursion, as the U.S. and other nations stepped up severe economic sanctions on Russia and investors worried about the impact of commodity prices. But a month later, markets had rebounded and the S&P was trading at a level higher than it was before the invasion, even as the price of oil remained elevated above $100 a barrel. So again, this was pretty recent. I'm sure many of you remember this. And we covered this on the channel too. S&P 500 index from when Russia invaded Ukraine to a month later. So again, as you can see, we got that initial dip, similar to what we're seeing in the markets right now. But a month later, the markets were fully recovered. Actually, less than a month later. Okay, it only took a couple of weeks for the markets to recovered at prior levels, and really it wasn't too crazy of a pullback, all things considered. So when markets can suffer, history tells us periods of uncertainty like we're seeing now are usually when stocks suffer the most. In 2015, researchers at the Swiss Finance Institute looked at U.S. military conflicts after World War II and found that in cases when there is a pre-war phase, an increase in the war likelihood tends to decrease stock prices, but the ultimate outbreak of the war increases them. However, in cases when a war starts as a surprise, the outbreak of a war decreases stock prices. They call this phenomenon the war puzzle and said there is no clear explanation why stocks increase significantly when war breaks out after a prelude. Okay, so again, I'm sure most of you are aware of the fact that wars can be extremely lucrative for obviously the winning party involved. That's why people go to war. It's typically due to potential capital gains. Again, that doesn't make it right at all. Probably makes it even more wrong. But there is many scenarios, as you can kind of see if you just pause over these charts, where war has actually been a positive catalyst for equities. Okay, so let's just scroll down here again. Pause wherever you guys would like, and check out this article for yourself if you want to read through the entirety. But I just, for the purposes of your time, I wanted to just go over the highlights I felt important. So to wrap it up here, why do stock markets remain resilient through wars? In the U.S. context, stock markets have tended to shrug off initial downturns predicated by conflict. In some ways, wars can benefit economies not directly affected by the conflict by boosting industrial production to meet the military needs of those engaged in battle. The development of new technologies, some of which can be applied to the private sector, is also often spurred by armed conflict. Which stocks do best during a war? In general, defense stocks, companies that produce weapons and armaments tend to fare the best during a wartime environment. Energy companies may also see a boost in conflicts that result in higher oil and commodity prices. Okay, so Lockheed Martin, Raytheon, the big dogs. Makes sense. Northrop Grumman, Pops owns a bunch of that stock. My grandpa actually worked at Northrop, so just fun fact there. Bottom line, again, we're actually wrapping it up here. Over the last few years, the markets have been conditioned not to overreact to political and geopolitical shocks for two reasons. First, the belief that there would be no significant subsequent intensification of the initial shock. And second, that central banks stood ready and able to repress financial volatility, said Mohammed El-Arian, who is actually one of I do enjoy. He's on CNBC a lot. I'm sure you guys have seen him. Older, I believe, Indian fellow or Middle Eastern fellow. Sorry if I'm incorrect about that. But chief economic advisor at Aliens, however you may pronounce that. Kind of just butchered that whole last sentence. But Mohammed El-Arian, I am a fan of that man. So again, for the most part, markets shake it off. There's not a crazy amount of consistency in timing, but ultimately the markets do typically recover, and that is really the primary point that I wanted to get across here. So I hope you remain optimistic. Even if times do get worse, being optimistic in general is, in my opinion at least, typically a better way to live your life and operate as a human. So please just let me know what you guys think about this below, and I look forward to hearing just your guys' thoughts in the comments. For the purposes of my short editor, if you guys would like to catch the full version of this, then go check out my YouTube channel, Royce Jacob. And we'll call it there, you guys. I'll see you in the comments. And until next time, always remember, take action, make waves. Peace.